Hello and welcome once again in the case study discussion. Right now we'll take case study number 14. Can we start a discussion? Yes, sir. So Wealth Limited is engaged in a number of businesses including automobile, infrastructure and construction. The VP Finance has identified 5 segments denoted as A to E below for ease of reference. You can see they have given segment sales information, segment result information and segment asset. So we know there are some quantitative threshold limit, correct? Now that we need to cross check. So let us find out that percentage of sales to the total sales, percentage of profit to the total profit and percentage of asset to the total asset. So you can see total sales for revenue will take both export and domestic sales. Chalega? Yes sir. So we'll find out percentage. So percentage how much? It is 60 divided by 660 is equal to how much? This is 0.09. So it is around 9%, I will say 9%. Then 165 divided by 660. This is what? 25%. This is 225 divided by 660 is equal to how much? 34%. Then 165 divided by 660%, that is 25%. Then 45 divided by 660 is equal to how much? It is 6.8%. So you can see out of this will be what? Reportable. This will be reportable. This will be reportable and this will be reportable. Or what you can do, 6,60,000, 6 lakh means 66 lakh they have given now. So it is 66 lakh they have given into what you can do, you can find out 10%. So you can see any which is more than what 66 lakh will be reportable. So more than 66 lakh will be reportable. So you can see B, C, D will be reportable, or you can do in this way. Chalega. Now coming to result, it is 5 divided by 70. How much? It is around 7%. Then 15 divided by 70. How much? It is 21% around. Then it is 25 divided by 70. It is equal to how much? 35%. Then 15 divided by 70 is equal to how much percent? 21% around. And 10 divided by 70, it is around how much? 14%. So this is reportable, this is reportable, this is reportable, this is reportable, correct? Then coming to asset, it is given 10 crore, means first one is 10 crore. Okay, so 10 divided by 28.5 is equal to, so this coming to 35% around. Then 2.5 divided by 28.5 is equal to how much? Around 8%. Then 3.5 divided by 28.5 is equal to around 12%. Then 5 divided by 28.5, it is around 17%. And then 7.5 divided by 28.5 is equal to around 39.2%. So all are, this is also reportable, this is reportable, this is reportable, this is reportable. So you can see all are reportable segment. Understood? Correct. So any segment which meet 10%, which is 10% or more of the limit given, then it will be reportable segment. Got this point? Yes sir. Coming to the next question. Wealth Limited has an identifiable asset QR with a carrying amount 20 lakh. Its recoverable amount is 13 lakh. So of course it will be impaired, and after impairment carrying amount will be 13 lakh. The tax base is given 16 lakh. The tax rate is 30%. Impairment loss are not tax deductible. Wealth Limited expect to continue to earn profit in future. What is the carrying amount after impairment? 13 lakh. What is the tax base given? 16 lakh. So there will be deductible temporary difference of how much? 3 lakh. 3 lakh into 30%. This will be, so 90,000 will be DTA. And they have given that they are expecting to earn future profit. So of course DTA can be recognized. Okay sir. Next point. Wealth Limited acquired a trademark for product from Kajar Limited for 10 year ago for 16 lakh. So this become cost price. The trademark is expected to have an indefinite useful life. Okay. The carrying amount as of 1st April 2001 is 16 lakh. Now due to competition, the sales of product has declined by 25%. The management has made assessment and has ascertained that trademark will continue to have indefinite useful life. However, the recoverable amount is ascertained to be 12 lakh. Now we know that any intangible asset having indefinite life will be amortized annually irrespective of indicator. So of course we need to impair it. So what is the impairment loss? Impairment loss will be what? 4 lakh, and we'll do impairment based on annual impairment testing irrespective of indicator. Wealth Limited is proposing to acquire Health Limited, which is currently following Indian GAAP. Other than Indian accounting standard, okay sir, means they are following accounting standard as per company's accounting standard rules 2006. Health Limited does not have taxable income as per the applicable tax law but pays MAT based on book profit. The tax paid under MAT can be carried forward for the next 10 years, and as per Health Limited projections submitted to his banker, it is of the position to get credit for the same by the end of 8 years. Means the MAT credit is available and they are expecting that it will be available. So of course, can I say on MAT credit we should recognize DTA? Yes sir. Health Limited is recognizing the MAT credit as current asset under the Indian GAAP. As per Indian GAAP, as per previous accounting standard, they were recognizing it as a current asset, but now as per India's it will be DTA. The amount of MAT credit as on 31st March 2001 is itna, and as on 31st March 2002 is 15 crore. Management is looking for clarity on how this would be impacted upon the conversion of Health Limited financial statement to India's once the acquisition goes through. Correct? So we need to find out how much DTA will be recognized. Let's see what the question they have asked. So first point, based on the quantitative threshold, which of the above segment would be considered as reportable segment? So all segment, you can see all are reportable segment. Option number D is correct. Yes sir. Next point, for the identifiable asset QR, what would be the closing balance of DTA or DTL at the end of period? Already we calculated DTA of 90,000. So option number D is correct. DTA closing balance will be 90,000. Okay. In respect of trademark with indefinite life, Wealth Limited seeks your advice on appropriate treatment from the following. Continue with the same carrying amount. This is not correct. Adopt amortization. They cannot be amortized. Test the asset for impairment as an external unfavorable event had occurred and reduce the carrying amount to 20 lakh. Test for impairment every year, and accordingly the carrying amount will be reduced to 12 lakh. So option number D is correct because they will be tested for impairment on annual basis irrespective of indicator. Correct. In relation to Health Limited, how will the MAT credit be recognized upon conversion to India? So of course it will be recognized as per DTA. So option number B is correct. In relation to Health Limited, what will be the DTA or DTL impact on account of MAT in the books of Wealth Limited for the year 2021-2022? So of course for this year we will recognize DTA to the extent of how much? To the extent of what? MAT credit. This is the MAT credit 15 crore. It means DTA will increase by 15 crore. DTA will increase by 15 crore. So increase by 15 crore. This is the correct answer. Increase DTA by 15 crore. So this is only correct answer. Let's see what the option given. Point number 1, option number D, all are reportable. Point number 2, option number D, DTA 90,000. Point number 3, option number D is correct. Point number 4, DTA. Point number 5, increase DTA by 15 crore. So all options are correct. Understood? Got this point? Let us meet again in the next video with the next case study. Till then, bye bye. Take care. Enjoy your study. Bye bye.